Okay, traders, we are taking a look at some of the most optimistic action we've seen in equities. Jerome Powell put the non-farm payroll in focus on the Wednesday press conference. The idea that if that jobs number came in disappointing, that the Federal Reserve would have to reconsider their current plan, at least their timing, their timeline, to eventual rate cuts. The other thing that he did do was take the rate hike narrative off the table. And that was huge because ultimately that rate hike narrative made its way in because one of the other members, in this case FOMC member Bowman, sort of injected that into the conversation. When pressed for an answer on whether or not rate hikes were on the table, he made it very clear, not before rate cuts. And then he also made clear if non-farm payroll was a miss, which it was, printing at 175,000 as opposed to the consensus, which was as low as that I saw about 215 to 238. That's a miss. And so obviously we could see the 8:30 response to that this morning straight up. I think it was a 50-point move in the S&P. All right, so what is so important about the price action? What are the signs of optimism? What are the signs of directional bias? What are the signs of normal volatility? What are the signs of strength? What are the signs of rate cuts? So we talked about the rate cut narrative. What are the signs of strength? Anchored volume weighted average price. We are above that level on the S&P. We are above that level on the NASDAQ. So that's really worth mentioning. That's worth noting. And both these charts now have price action above the cyan line that you see here crossing the chart. Both of them are above the anchored VWAP. The NASDAQ is printing a yellow candle, which means it's a more neutral candle. The S&P has as well. This is the first time we've broken from the red bearish candles since the 12th of April. So yes, it's been a minute. This is a good sign of potential strength to come. So kind of add all these signs. Number one, miss an NFP, what Jerome Powell put out there, expectations for maybe rate cuts as soon as September. Those adjustments we could see pretty easily on the Fed Fund futures. Take a look at September, and you'll see, again, not overwhelming expectation, but you'll see here only a 33%, 32.9 expectation for a hold at the September 18 meeting. But you can look at 48.1, 17.7. That's cumulatively the dovish side, the rate cut side. 500 to 5.25 is the expectation for that quarter point cut. But this 475 to 500 means that there's a 17.7% expectation that we will have already cut during the July meeting, and then that we get a second cut in September. Not likely, but the cut for July is at 34%. Is it as high as the hold? Not even close. I'm not expecting a July cut. September is definitely on the table. You move out to November, you move out to December, and you could see as we round out the year, traders and investors are discounting, expecting there will be at least one, if not two, rate cuts in to this cycle. And how do we know that? How do we measure that? This column here is the hold, because that's where we are right now. This is 1 quarter point cut. This is 2 quarter point cuts in terms of expectation. And this here is 3. Is 3 very likely? No. But again, you can see it's at 19.4%, which is actually greater than being at a hold come the end of the year. So it's actually more probable that traders are expecting up to 3 quarter point cuts than actually holding as we round out the year. So again, have a measuring stick for this macro, and this is how we do it. Other ways to find where strength is playing out. What are the other signs? Big up day in bonds, meaning that as we move higher, I'm going to take a look at the ZB here. I don't know what I just pulled up. Let's try this again. The ZB, the long bond. Take a look. Big up day, first yellow candle. It's not by any means out of the woods yet, but this is a transition from the overall downtrend of the candles to a neutral candle. But that neutral candle is still at a mean reversion. There's still a battle ahead. All right, if we take a look at the 10-year, same scenario. Overall downtrend, but that neutral candle is just an initial first step. It's an early sign. If we take a look at the dollar through the 6E, dollar, neutral environment, first yellow candle. We haven't seen one of these since the 9th of April. Euro moving higher is dollar moving lower. So keep an eye on that. So these are more signs of strength in equities, not just the equity moves themselves, but all those supportive futures contracts that are saying, yes, we're moving in expectation of those rate cuts. Now, the last thing that I'm looking at is, are we seeing signs of volatility normalizing? And that's a big deal because that's really what's plagued a lot of April. And the answer is yes. As long as we can string together a handful of days where price action holds the daily price movement range, the historical volatility range on these indices without exceeding to the first or second standard deviation. Right? We did on Wednesday, by the way, and on Tuesday. But if we can hold these ranges as we did today, this is a good sign that volatility is normalizing. And the big one, I saved the best for last. We are below 15 on the VIX, and the more stabilization we can see below the VX futures, below 15, 16 being the high level, where once we broke above that, all heck broke loose. Staying below 15 is going to be a really good sign for follow through. Take a look at these two down candles, not just that they're down, but they're below 16 and then progressively below 15. This is what's going to help keep the upward continuation, keep the volatility within the normal parameters, and get some follow through out of this market. Hope that helps. As always, thanks for watching. Thanks for smashing that like button. If you have any questions, leave them below, and I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.